Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about two multi-factor ETFs and two value factor ETFs that invest their money into European companies and distribute a dividend. And as I like to focus on UCITS ETFs, so ETFs that are based in Europe, these four ETFs are also UCITS ETFs. And when I talk about multi-factor ETFs, it's important that I first explain what factor investing actually is. So I already mentioned it in the previous two videos that I made for my YouTube channel, but you can focus around value and there you try to select undervalued companies. So in this video I'm discussing two value factor ETFs as well. Then you can also focus around quality, where you try to select companies with good fundamentals, so good earnings, good profits, good cash flow. But you can also argue that the quality dividend ETFs, which I talked about in previous videos as well, they focus around good quality dividend companies, so companies that have a low payout ratio, have good cash flow so that they can maintain the height of their dividend continuously also in the future. So there you can argue that quality dividend ETFs also are factor ETFs. And then you also have the volatility factor, where you try to select companies with a low beta. So a beta value below 1 means that your company is going up and down less than the overall market, which doesn't mean that it's a good thing, because it can always be that your company where you invest in suddenly reports bad results and that your stock goes down 20% from the next day onto the other one. But overall, when you select companies with a low beta value and when you invest then in an ETF that focuses on that criteria, you're well diversified, and overall that basket of companies is going to move less up and down compared to the overall market, so you have less volatility in your investment vehicle. Then you also have momentum investing, where you try to select companies that are in a good flow, and right now, yeah, it can be that your ETF is focusing more on companies that are dealing with artificial intelligence, and artificial intelligence is in an upward trend right now. So when your ETF is doing that and augmenting the percentage of companies that invest in artificial intelligence, that your ETF is a kind of momentum factor ETF. And multi-factor ETFs, they try to combine multiple of the above factors. One factor that isn't here but is also often mentioned is the ESG norm. And there it appeals to investors because they want to make the world better, and by investing into ETFs that focus on companies with a better ESG score, they think that they are doing a good thing and investing their money, putting their money where their mouth is, and actually try to promote companies that have a higher ESG score. And as I said in the previous videos as well, this is a simplification. So for details how your ETF is doing it, how your ETF is dealing with multiple factors, always read the prospectus of the ETF that you want to buy. So in this video, I'm going to discuss four ETFs that invest their money into European companies. And the first two multi-factor ones are IFSD, and it's on the London Stock Exchange from iShares. You have the EPVLD from UBS on the SIX Stock Exchange. You have the two value factor ETFs then, with the IEDL on the London Stock Exchange from iShares once again, and the EMVEUA from UBS on the SIX Stock Exchange again. Everything is in euro. The only thing that is important is that the EPVLD can also be bought in Swiss francs on the SIX stock exchange. A lot of people like it when I mention it, that an ETF is also available in Swiss francs, so they don't have to make the currency exchange from Swiss francs to euros in order to buy the ETF that they like. And in this case, the EPVLD you can also directly buy in Swiss francs. So the first one is from iShares, the MSCI Europe Multifactor UCITS ETF, the IFSD. It has a total expense ratio of 0.45%, which is in fact quite high from BlackRock. I don't know why it's 0.20% higher than all the other ETFs that they have around multifactor or factor ETFs. So 0.45 also compared to the other ones, which are all 0.25% in this video. I don't know why it's 0.20% more expensive to as a total expense ratio for this ETF. So when somebody of BlackRock is watching this video and can explain it to me, please comment in the comment section down below. But otherwise, if you don't have a good explanation, please reduce the total expense ratio of this one also to 0.25%, please. So you can buy it for 6.66 euros on the London Stock Exchange. So it's the number of the beast, only with a point between the first six and the other two sixes. The dividend is also being paid out in euros. It invests in 159 companies and there is only 4 million invested in it. It's also a still recent ETF, so it started on the 23rd of February of 2018. And the past year it's up 20%, and the past 5 years it's almost up 77%. It pays out 2 dividends per year, so once again, multi-factor and factor ETFs from iShares tend to have only half-yearly dividends, while other dividend ETFs that are focused around actually more focused around paying out the dividends, they pay out quarterly. And I like that more, but yeah, beggars can't be choosers. So here in this case, when you are interested in multi-factor investing, you don't have that much choice. If you want to invest in Europe, you have only half-yearly paying dividend ETFs. And iShares pays out in June and December, and the dividend yield is 2.55%. And once again, it's Europe, so the dividend in June or in the first half of the year is always going to be higher than the final payment of the year, because of course a lot of European companies are only paying yearly dividends, and they are most of the time paying it in March, April, or May. So that's why the dividend in June is almost always higher than the final dividend payment of the year. Then we have the EPVLD from UBS with a total expense ratio of 0.25%, so much better than the one from iShares. And you can buy it for 19.928 euros on the SIX stock exchange. There are 58 holdings in this ETF, and there is 138 million invested into this ETF. It's a fully replicated type, and it's up 11.45% in the past year and almost up 50% in the past 5 years. So not performing that great as the iShares ETF. That's important. Although the total expense ratio is better here, still the iShares one looks more promising. And then you also have 2 dividends per year, but just as in the previous video for the USA multi-factor ones, here UBS has a payment of 0 in February as well. Okay, in February last year it wasn't that high as well, 0.05. That's because the dividend payments of course start in March till beginning of June. So in February there isn't much to distribute yet in Europe. So that's why I think it's only 0, but yeah, it's not going to make that much of a big difference for the dividend yield for this ETF because it was only 0.05. But as you will see in the next one from UBS, so the last ETF that I'm going to discuss, there is a slight difference there, and that's a question mark how high the dividend yield is going to be there. Then we have the Value Factor ETF from iShares, the IEDL, with a total expense ratio of 0.25%. So here they do have a lower total expense ratio. So I strongly advise them to lower it for the other one as well, but I'm just a small YouTube channel, so I don't know if I will reach them, yes or no. This one you can buy for 5.66 euros on the London Stock Exchange, so not quite the devil number here, but the first six is exchanged by a 5 here. It's by accident, of course, because the price went up a bit on last Friday, and that was on the 21st of June of 2024, if you are wondering and watching this video later on. The dividend is also being paid out in euro. There are 151 holdings into this ETF, 39 million investing into it, and also a sampling ETF just like the first one. So, in fact, you also here have the multi-factor one of iShares and the multi-factor one of UBS, and then that one there, the multiple is cut, and they only focus on the value factor for these two ones that I'm mentioning here. So for the rest, the name is actually quite the same. Here, almost up 12% in the past year, and the past 5 years almost up 50%. Once again, iShares June and December, and a dividend yield of 4.35%. So that's a quite nice dividend yield. And once again, in Europe, dividend payment in June higher than the one at the end of the year. And then we have the Value Factor ETF of the UBS bank, and there it's EMVEUA, total expense ratio of 0.25%. The ETF is available for 44.37 euros on the SIX stock exchange. There are 145 companies into this ETF, and 111 million invested into this one. Fully replicated type as well. And the 1 year performance almost the same as the previous one, but the 5 year performance almost 50% less than the previous one. And here the payment in February was 0 as well, but there it was 0.25 I think last year. So when this is going to be added to the payment in August for this year, the dividend yield isn't going to be 3.13% for this ETF, but around 3.70%. So that's important to keep in mind. I also mentioned it in the overview slide in orange, so that you have that in the back of your mind. So we still have to wait for the payment of August. But it's, yeah, Europe payments before February, before March, it's really rare. So it's not abnormal that the payment in February is then 0 for this ETF. And here you have the overview. So if you look at the 5-year performance, the IFSD from iShares has the best 5-year performance, and the EMVEUA, the Value Factor ETF from UBS, has the worst performance over the past 5 years. But here the total expense ratio of the iShares one sticks out a bit, so that's a bit, yeah, sad. But I couldn't end like this, of course, so what I like to do is compare them to other ETFs that I like for European companies. And as you know, my wife and I, we invest into the LDEG one, and that's the LNG Quality Dividend ESG ETF from LNG. And that one has a dividend yield of 4.37%, and also the 1 year performance, okay, it's lagging a bit behind, but if you look at the dividend yield, you make up for that, of course. And then the 5 year performance, it's 33.35%, excuse me for that. And the 5 year performance, yeah, it's only been around for a little bit over 3 years, so I can't give the 5 year performance yet for the LDG one. And the total expense ratio and the dividend per year, so quarterly payments, I prefer that as well. Okay, the LDG one, it pays out the highest dividend as well in around June. So yeah, it's not that big of a difference because the three other payments are not that high as the one in June, but still quarterly payments, I always prefer that. And the total expense ratio is 0.25% as well. So my wife and I think we made a good choice investing into this one. And I wanted to make other comparisons as well. So we have the Vanguard FTSE Europe one as well, with a dividend yield of 1.14%, 1 year performance of 14.30%. So beating the multi-factor one of the UBS ETF and the Value Factor ETFs, both Value Factor ETFs. And 3 year performance, it's performing more or less the same as the other ETFs. And for the 5 year performance, it's also more or less the same, but the total expense ratio is only 0.10%. Vanguard being known to have low total expense ratios, and it's a quarterly paying dividends ETF as well. Then you have the SXPIEX. So that one is the Eurostoxx 600. So there you invest into 600 European companies. You have a dividend yield of 2.62, and the 1 year performance, yeah, it's a little bit higher than the other ones, lower than the iShares FSD one. But the 3 year performance, it's more or less the same, and also the 5 year performance, it's more or less the same. Total expense ratio, it's 0.05% less than the other ones, and also quarterly paying. And as the other ones are always mentioning MSCI, I wanted to include the MSCI Europe ETF as well from HMEU, so HSBC ETF one, where you have a dividend yield of 2.57%, 1 year performance of 16.20%, so better than the last three ETFs that I discussed in this video, but less than the IFSD one from iShares. The 3 year performance and the 5 year performance, yeah, that's more or less comparable, and the total expense ratio is only 0.10%. And 2 dividends per year, and it's also need to be said that HSBC, they have ex-coupon date and then a payment date that are laying quite far apart from each other. So that's also something you have to keep in mind, that when you buy an ETF from HSBC, that the payment always comes later than for other ETFs. Most of the time there, it's more or less 1 week when it's an Irish one. And for example, SGPX, my wife and I, that's our main ETF. That's the global one. There, the dividend is being paid out on the same day as the ex-coupon date or the next day already. So that's a big advantage because you can reinvest your money faster, and sometimes that matters a lot. But with that being said, I thank you for watching this one. Please consider subscribing to my YouTube channel if you like this kind of content. Also hit that like button, it helps my videos to be distributed to other people that like this kind of content as well. And thank you for watching, and see you on the next video on my YouTube channel. Bye.